Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Thanks for joining us here again at AusBiz as we get across what has moved markets overnight. Plenty to consider, with global investor sentiment souring as the US and Iran resumed hostilities in the Middle East, sending oil prices surging around 8%. While on Wall Street, investors were focused on the Fed's decision to leave interest rates on hold, and AI-related chip stocks added to recent declines, leading to further losses on the S&P 500 and Nasdaq. The Dow also down more than 2%, ahead of earnings reports from tech giants Meta and Microsoft after the bell. Well, Meta reported a 91% fall in free cash flow, highlighting the social media giant's costly AI build-out while narrowing its forecast for annual capex. The Facebook parent reporting free cash flow of $784 million in the second quarter, down from $8.5 billion a year earlier, shares falling around 5% in extended trade. Microsoft top analyst estimates for quarterly cloud revenue growth there in a sign in its massive spending on AI infrastructure was paying off. Revenue at the company's Azure cloud computing business rising 43% in the fourth quarter. Its shares up 4% in extended trade. Qualcomm forecast fourth quarter profit below Wall Street estimates and said revenue from Apple products would decline faster than expected. Shares down more than 3% after the bell. And shares in AI infrastructure company Vertiv slumped 17% after missing quarterly revenue expectations. Elsewhere, Starbucks raised its annual sales and profit forecast for the second time, betting that the company's turnaround efforts will translate into sustainable growth for the world's largest coffee chain, sending its shares up about 9% in extended trade. Well, the US Federal Reserve has left interest rates on hold, with 3 of the FOMC Policy Committee's 12 members voting to lift rates by 0.25 percentage point.
If inflation continues to be elevated through the forecast period, interest rates could well be part of that solution. We will deliver the 2% inflation target. That is the committee's definition of price stability.
Meanwhile, in the Middle East, a drone has hit a US-owned gas storage tanker at Egypt's Mediterranean port of Damietta. In an expletive-laden response, President Trump repeated his threat to retaliate against Iran for firing on US troops, saying, "We'll be hitting them hard." Well, Iran confirmed overnight that it had fired on US bases in Jordan and its ships in the Strait of Hormuz. And after the release of the Fed's policy statement, traders priced in a 57% chance of a rate hike in September. That's according to CME's FedWatch tool. US bond yields leapt higher, the 30-year yield surging to its highest level since 2007. Yield on the 2-year note fell 6 basis points to 4.23. The 10-year was up to 4.66. The US dollar index down around 0.5%, and the Aussie is trading at 69.6 US cents. Well, oil prices have surged as airstrikes resumed in the Middle East, with the US government data also showing domestic crude inventories there have fallen to multi-year lows. Well, Brent futures around 8% higher to close to $91 a barrel. Gold erased earlier losses to rise around 2% as the dollar fell following the Fed decision. Spot gold at around $4,065 an ounce. Copper futures fell almost 1%. Iron ore little changed at $99 a tonne, and Bitcoin is currently trading below 64,000 US dollars. So, as I mentioned there, lots to consider on markets. Now let's get to it. Ira Epstein joining us from Linn & Associates. Ira, a very warm welcome to you again. Let's start with development in the Middle East. Once again, both sides firing at each other. Oil, gosh, that's volatile at the moment, isn't it?
Well, thanks for having me back, Andrew. In oil, I think how you have to look at it is Iran's beating its chest. It is telling everybody, we own the strait, we tell people what to do, and what goes on here is what we control. In other words, anything going on is them. They feel greatly emboldened. They have shut the world traffic down, Strait of Hormuz, and then the other one, what is it, Bab el-Mab, and as that's happening, they are getting to the point where they're saying, we're getting enough here that at some negotiation table, we're going to get more than we would get 5 months ago. And there's no question about that. Will they get control of the Strait of Hormuz? Probably. People don't want to admit that, but that's probably what's going to happen. Oman made a very nice offer, a voluntary payment offer. They followed what others had done in other areas like that. Iran's answer is nope, not even negotiating. Nope. And if you let ships by your area, they are fair game for us to hit. So if they don't control it, it doesn't happen. Our president is caught in a rock and a hard place. He won the war 3 weeks into it. He had taken out the nuclear facilities. Isn't that what we were there for? From that point on, the war went south for him, and it is still south for him. We can hit them all we want. They've proven they can take the hits. We haven't yet gone after the bridges in a big way and the power plants. I don't know that he wants to do that, and I don't think world will want him to do that. There's got to be an off-ramp here that he finds, and that's where I think we're at. Kevin Warsh today, very interesting. Number one, I think that all the Fed members are dreaming. They're not going back to 2% inflation. I was here with you when we had COVID, and I said, you're done with getting to those numbers. Inflation's going to happen, and you're still feeling that. There's always some event. Now it's Iran with oil prices. We can see that the U.S. curtails it out of there and oil drops $20 a barrel, but that's about it. That's the problem. It's still going to be a high number, and the world has used up their reserves, so you've got to rebuild them. Iran has to realize that countries will look to find a way to not use the Strait of Hormuz. It could be pipelines, it could be trucks, it could be reroutes. The world's going to get away from that. They'll win the day for a short period of time, and then they're going to find they really don't have the day. So you put this all together with a Fed that thinks they can go to 2%. Because Warsh inherited that goal at the beginning of the year, he's defending it. But if they had to do it again, what's wrong with 2.5% inflation?
So therefore, Ira, if they're going to achieve that target, which you're saying is pretty unrealistic, is it a given they're going to have to raise rates this year?
Yes. Yes, really that simple. They're going to raise rates, whether it's 1 or 2 times. The market's done it for them, Andrew. When you see a cash market that's already done this, a full quarter point, what is the Fed doing if it goes up? Remember what Warsh said again today. It's not the Fed that's going to give the guidance, it's the marketplace. And the marketplace is saying that interest rates are too low as it is. The U.S. economy, and that's what the job of the Fed is not the world economy. The U.S. is in a fabulous place. It is strong. You can't go by the stock indices that built in the AI, and now the companies that are feeling the pressure is because the CapEx spending might have gotten too robust, but the revenues are coming. We saw Microsoft doing phenomenal, all right? And they're going to do phenomenal. My timing was off on Microsoft. I thought they'd be the winner on this at the beginning of the year. It's going to be next year, but they're going to be a winner on this because everybody uses one of their products, and their products are going to have AI all over them. How do I know I use them? And whenever I'm using something and I can't get away from it, I know it's a good product.
Yeah, I mean, and sort of referencing what we're seeing with bond yields, further upward pressure there, in part, obviously, because of the massive amount of capex and therefore borrowing that's going on at the moment. Ira, look, there are concerns clearly being exhibited in the share markets. You're going to have to look at what's going on with chip stocks at the moment. Investors increasingly concerned, particularly about those so-called circular deals. Is that a fair concern?
Yeah, that's what happens. Parabolic moves lead to moves to the downside. I'm talking parabolic up. That lead to moves to the downside like this inevitably. It happens over and over. It's a cycle. Everybody's heard the word a cycle. This does not mean there aren't going to be big winners. But the days of saying that NVIDIA is going to $500 a share, it's not going to happen. All right, not in my opinion. When you get as big as they are with the market share, then what happens is people chew away at it. We talked about that a couple of weeks ago. But $200 is a pretty good value. The company I'm worried about is Tesla. It's no longer a $400 company. It's a $300 valuation. SpaceX was a joke. I had to buy a share because I wanted to write about it for my ETF newsletter, and I always feel I should own something if I'm going to cover it. So with everything I have, I bought one share, and I told all my friends, boy, is this going to go underwater. And it did. And that's what I expected. I won't get rid of it. I'll just hold it because it's my token share, one share. And that's what's wrong. You're buying hype. Hype can turn into dreams with a guy that turn out to be real, like Musk, but it's timing. And when the public rushes through a doorway and they put a $200 a share valuation on this, I start laughing at it, cracking up, and thank God I didn't buy it up there. But that's what you do. So all of this is happening. Metas, eventually they're going to make money, but the market wants to punish them for spending too much money now. So what you do is you don't try to pick that. There are other areas to be in the marketplace. Kraft Heinz, there's other areas. Ketchup sells like mad. Take a look at the stock. You're going to be shocked at what you see. There's a lot of good companies and a lot of bad ones, and you have to avoid them. But it is diversification away from AI for a while. There's going to be a time to come back in when the PEs are more realistic. I don't know what that is, nor does anybody right now. Right now, it's sell everything AI and diversify. That's the thing.
So, Ira, have you upped your levels of cash? And also, what's your view on precious metals at the moment?
I have, for my clients, the smallest positions in stocks right now that we've had during the year. So that gives you an idea, and I'm ready to enter. I'm just looking at where to go. I am bullish in the gold market. Unless you can take out the recent lows in gold, I think you're carving out a long-term bottom. Listen to what War said. They can't get inflation down to where they want. Therefore, that's a signal on gold. What's been the headwind for gold is the war with Iran. That's coming to an end. You're not going to have another 5 months. I don't know the amount of time, but you're more past the halfway time, I think, than anything. And that is the problem. It'll probably be over well before November, the midterms in America. So whatever the outcome is, at that point, you unleash the inflation story for gold. What's fighting with it? Then it'll be, you're going to tell me a strong dollar. You saw the dollar react to the idea today of higher interest rates, what they'll do to it. It nosedove. So you start taking these clues and you look. You don't have to be the first guy in the block in, but you have to have a game plan. And that my game plan is to own the gold. And I must tell you, I don't have my clients in it in the futures market.
All right, always great to get across your strategy. Thanks for joining us from Linn & Associates.
Thanks for having me.
Let's turn our attention to the local market. We are expecting to open lower. As you can see, SPI futures down around 0.6%, reflecting on what we did see on global markets overnight. Obviously also in response to oil, as I mentioned, very volatile. It having fallen about 16% over the previous 3 days, it's now back up 8%, given we've had the resumption of hostilities in the Middle East. We'll get across that and many company updates too this morning. Join us for the Open.